Welcome out to another Trading Justice podcast. I am joined with my brother Matt. This is Mark. We're from Tackle Trading, bringing you just fun entertainment, excitement, and hopefully great analysis. That's what we try to do every week on the podcast. A little mini version of the podcast. My brother Matt does every day in Morning Action. It is a video he does where he breaks down the top stories going on that day. He looks at the technicals. He looks at the top stories. He gives just world-class analysis. You can sign up for this fantastic deliverable product just by going to the link in the description below. Matt, you do a great job with Morning Action. Just tell us a little bit about it.
Yeah, it's a great daily digest for our community at Tackle Trading, and if you want to get access to it, like Mark says, you just got to hit the link in the description below, and you'll never not read it.
Yeah, I mean, it's just great. Like I actually, as a consumer, watch the video every day, just see what Matt's take. Look at his technical.
The video is just one part of it, honestly. Yep. It's the landing page, and you get obviously the video, the market analysis. But Coach Frank puts the top trade idea every single day in Morning Action as well, and so you definitely want to check that out for the top trade idea as well. But definitely check it out. Sign up for it in the description below.
And Matt, we've been in a really, really good trading environment. Traders like yourself, traders like Matt, directional traders. This has been a great little stretch for traders, just traders in general, really taking advantage of the situation.
I think you got to throw the investors into there, recovering on the investor class,
well, they're
leaving a lot of pressure on the investor class. I'd say traders are happy. Traders are happy, definitely, but I honestly, I think the investor class is probably happier that they're seeing some recovery here.
Do you think investors are happier than traders, or do you think they're just more relieved?
Day traders are never happy. I speak as one. No, we go from one day to the next day. Yesterday was yesterday, today's today. But no, it's day traders only happy as the success of their latest trade. No, I would think the investor class would be a little bit more relieved here. Traders trade up, down. They really don't care, Mark. That's the simple reality of the situation. The market's going down. We're shorting we're trading the trend on the 1 hour chart. Market's going up. We're trading the trend on the 1 hour chart. It really doesn't change. You don't have a different philosophy. You don't have emotional swings up and down as a day trader. As a swing trader, you get frustrated by environments, but that's all volatility. So I would say, yeah, when you're looking at the recovery over the last few weeks, I would say chiefly number one, and I don't think there's a close second. Investors are, I don't even know if happy is the right word. Relieved, I think is probably a better word.
Yeah, I mean, that's, I think, like in talking to investors, just that, oh, okay, that was something, investors tend to have that buy and hold mentality, go through the swings. I think they're feeling really good. I know they were feeling good on Monday. Matt, really significant news. You and I have been joking the last few days. This is the most boring 6% up week in the NASDAQ ever. Like it started with a bang, right? I mean, seriously, like and NASDAQ's up like 6%, the S&P's up like 4+%. It's been a monster week by anybody's standards, and it felt like it was kind of front run, over the weekend with the momentum.
Well, it wasn't just the weekend. I mean, we had a little bit of a gap up over the weekend, Mark, but that cash open was really strong on Monday. It carried through on Tuesday, and yeah, we're seeing a little bit of slowing momentum in the market right now. But I don't think that should discount the momentum that we saw earlier in the week. A lot of the market activity kind of was on that Sunday gap open on the futures, Monday, Tuesday, really strong days. And the last 3 days have been a little bit of slowing momentum at the top end, but I haven't seen the bears take hold here. And so, yeah, it's been a good week for the bulls. Bulls had a really good breakout on Sunday, and it feels like a world away, but it was just Sunday that we saw the tariff announcement or the trade deal announcement with China that they're going to continue to negotiate. They got the 90-day pause. That feels like a world away at this point, but it was only on Monday. It was only 4 days ago. Like that's how this market is right now. Like 4 days ago, massive catalyst, upward movement price. Everybody's happy. And that feels like a world away at this point because the story's shifting. It's not the fact that necessarily tariffs are not going to have an economic impact, and it doesn't mean that we're not going to be talking about economic data moving forward in the central bank, and it doesn't mean that every concern from the economy is alleviated simply because they're negotiating a potential trade deal with China over the next 90 days. There's still conversations to be had, but it feels like a world away at this point because the market's moving on. The market's putting that conversation to a certain extent in the rearview mirror, and they're moving forward. That conversation is going to have a big time lagging impact, but for the market's focused on other things right now.
Yeah, and some of the things it was focused on, Trump was in the Middle East this weekend. President Trump was, and we had the big announcement on the weekend. China and the United States, little trade truce, 90 days, lower tariffs dramatically, see how it works out. But then conversations really shifted, and they shifted towards the technology space and some of the deals. Like President Trump's trip was like full of headlines, to say the least. I mean, this was just from a political perspective with market ramifications, because he's out there. And there were a lot of CEOs with some $1 trillion market caps behind them. There
was a lot of people wanting to hang out in Dubai this week. There's no doubt about that.
There really was. And
Dubai is an epicenter of technology these days, and you saw that play out this week. I think it's important to understand.
And the China, U.S. trade truce, that started on Monday, really for me personally, became a second fiddle. Like you said, markets move on fast, traders move on fast, investors move on fast.
Politically, we'll still carry on the conversation. Society will carry on the conversation, but the market moves on.
Yeah, and focusing in on some of these semiconductor deals, Matt, one of the things that in this rally and, the AI trade has really been revitalized. It's something that we have talked about going back to Taiwan Semiconductor's earnings report, which seems like a million years ago, about a month ago, where it's like, hey, this is a fantastic earnings report. We saw the earnings for technology as a whole really hold up. They had a decent earnings season. And then we have seen that momentum and that revitalization of the AI trade. And it kind of got some gasoline on it with some of the deals announced out of the Middle East this week with specific semiconductor companies.
Well, specifically, we've been talking about the revitalization of the AI trade since Taiwan Semiconductor, and we've seen technology outperform really ever since the week after that. After we started seeing trade deal alleviation, the earnings results that stood out earlier in the season, and those were a lot of technology, a lot of AI. But you go back to Taiwan Semiconductor, and then you had ServiceNow the week after. Then you had Microsoft the week after. Every single week, there's been an AI story for the last 4 to 6 weeks. It's this week that everybody and their dog's talking about it, though, because it's this week that you started seeing semiconductors take hold, and you started seeing specific news on AMD, specific news on Nvidia, specific news on Qualcomm, and then some secondary impacts on the downstream there as well. And so it now looks like there's legitimate momentum here on the AI side of the equation, because that trade that we initially talked about 3-4 weeks ago, and I say this all the time at Tackle, we have conversations that others are going to have in 2 weeks from now. We do it all the time. It happens all the time in this podcast. We were talking about it 2-3 weeks ago. We move on. The market catches up to it, but it doesn't mean that momentum and that storyline is not legit, not real, doesn't have legs, because it certainly does. You go from Taiwan Semiconductor a few weeks ago to ServiceNow to Microsoft, to now kind of this week. And this week, Mark, and that was last week was data center build out and hyperscalers stepping in. And now this week, you're talking about deals coming out of the Middle Eastern trip that the president took this week. It was his first trip that he took internationally. He chose the Middle East, and he visited basically 3 countries: Qatar, UAE, and Saudi Arabia. And out of all 3 countries, there are significant deals. And I think it's extremely important. This isn't a political conversation. That's for other people to have. There was legitimate deals that were signed that's going to impact stocks that are US-based equities. And so when you're talking about that AI side of the equation, Mark, you're talking about Saudi Arabia putting in billions and billions and billions of dollars into AI infrastructure, as well as the investing in, NVIDIA chips. When you're talking about the UAE AI initiative, that is a $1.4 trillion pledge over a 10-year time frame. Okay, 1.4 trillion. Now, I saw a lot of people throw some cold water on that 1.4 trillion because the GDP out of the UAE is only 200 billion a year. But we're talking about AI investment. We're talking about Dubai. We're talking about one of the biggest growth cities in the world right now, if not the number one growth city out there. And there are massive investments coming into AI. And so when you're looking at that $1.4 trillion pledge over the next 10 years, you're talking about specific build-outs in AI, not only on Nvidia. And that's the thing. The Saudi Arabia situation was specifically on Nvidia, but on when you're talking about the UAE and that 1.4 trillion, you're talking about obviously Nvidia chips, no doubt about that. But you got to be talking downstream here too. Companies like Applied Materials, LRCX, those infrastructure type stocks in the semiconductor side of the equation. Obviously, Taiwan Semiconductor gets a big build there, but it's not just that. What we're also seeing out of that 1.4 trillion mark is pledges on data centers. And if you'll remember, just a few months ago when we got DeepSeek come out, there was about a month-long conversation in the market regarding the death of the data center. And that seems like a world away as well at this point, because that part of, if not a lot of that 1.4 trillion is pledging on data centers. So you're not just talking about
it's such a big
Nvidias of the world.
Point you're making right now. It is such a big point you're making right now, because, we've been so consumed with tariffs for the last couple months. But before that, some of the market worries were around, and specifically in technology, which we saw lead to the downside far, far before Liberation Day. In fact, Scott Bessent would go out and make jokes on press meetings where he'd say, we don't have a market problem, we have a Mag 7 problem, right? He made that joke several times, referring to
that's because there was a specific Nvidia problem before the tariff conversation. He's not, Bessent wasn't wrong on that.
That's very Marcus.
The market was selling before tariffs, and it was selling based on two stories: Nvidia and Walmart. The Walmart consumer concern that came out at the late in the first quarter earnings season, and then you had Nvidia. And so you had two big stocks. Obviously, Walmart's not a Mag 7, but they're chiefly important out there. Nvidia, Walmart kind of led that concern, and then you had tariffs on top of it. But as tariffs are getting alleviated, what I think people are missing in the market right now is, as that story dissipates in the market, what we're seeing now is a recovering story of the original causation that the market was going down in the first place. And again, I want to be clear on this. This is not just an Nvidia story when it comes to the AI build-out. When you're talking about an AI build-out, you're talking about downstream as much as you are the leadership there. And so it's not just about understanding the impact to Nvidia and the obvious impact to Taiwan Semiconductor, but also the downstream impacts on those companies as well. And then when you look at the totality outside of the AI situation, when you're talking about Trump's first international trip, don't you also have to talk about aerospace? Don't you also have to talk about defense? Since you got 96 billion out of Qatar on defense spending, since you got 10 billion out of Qatar on airlines, since you got 142 billion Saudi Arabia defense package, that 142 billion defense package out of Saudi Arabia is the largest ever. And so these stories on these international trips are not getting the headline love, in my estimation, that they should, because the market's focused on a little bit of other things this week. But those are legitimate catalysts here when you're talking about, you want to talk about one crew, right? Well, one crew from a fiscal side of the equation right now is kind of out of the game right now. One crew from a monetary perspective is kind of out of the game right now. They're sitting on their hands doing absolutely nothing. So where's this money coming into from a growth, Mark? For how long, between you and I in this podcast, in tackle trading content, in personal conversations you and I have had, how long have I said, where's the growth coming from here in the recovery? Where is the growth going to come from? It's not going to come from consumer spending, not after what we're seeing on the consumer side. But now you're seeing pledges of this type of capital investment coming into the United States that have a direct and an indirect impact. And so I think it's extremely important to understand this Middle Eastern trip because of the deal side of the equation. And in the newsletter for the Tackle Trading Pros later on today, usually Article 2 in the newsletter is all about understanding the earnings environment. Well, we're kind of out of earnings season right now, so I'm actually going to detail kind of these deals and the important stocks, both from a direct perspective and an indirect perspective for our Tackle Trading Pro member community.
Yeah,
So
I'm glad. I'm
if you're
glad you're
not a pro
doing.
member, definitely come over and check it out
Yeah,
because we go through more detail than anybody else out there
yeah.
does.
This definitely, for me, was the story of the week. Which, in a time period where you had the Chinese news, which stole the thing, because the Chinese tariff news, it comes and goes, right? A deal will eventually have that we settle. This AI thing has legs beyond the
It's
conversation
not,
around it.
but again, it's not just AI. And again, I'm an AI guy. Don't get me wrong. A lot of that significant investment was coming out from the AI side of the equation. But you got infrastructure stocks. There's industrial stocks that are going to stand to benefit on these deals. There are utility stocks that are going to stand to benefit on these deals. And there's basic material stocks that are going to stand to benefit on these deals. It's not just AI when you're talking about that Middle Eastern trip. It's defense. It's certainly technology, semiconductors, and AI. It's airlines. It's manufacturers. There's other things that are happening out there. And so in the newsletter, I'm going to look at both what are the deals, what are the direct stocks that are to be impacted here, and what are some of those indirect stocks, Mark? And I'll just give you one example of that. Stocks that that a lot of people usually don't ever talk about in any capacity when it comes to these types of situations. So, for example, Boeing, right? Everybody knows Boeing, and I'm not going to go through and discuss Boeing at length here, but everybody knows that story. They know the Boeing story. They know Boeing has a direct impact to these deals. They see the headlines that are coming out of Qatar and out of UAE ordering all these Boeing planes. But what about Honeywell? What about Spirit Aerosystems? What about GE Aerospace?
So you're
These
really
companies
focused.
are downstream companies that are going to get an indirect
Yeah, and
impact.
so your mind is really focused on, okay, the headlines that they write themselves. What's the next level of analysis, the downstream impacts, whether it's the AI or the Boeing or
Well,
that?
do you want to chase Boeing after a 80-point move on a V-shaped recovery, or do you want to take a look at, say, LDOS, which is going to be that is going to have an impact downstream, but is coming from a lower position on the chart and it is going through reversal situations? So it's one thing to understand. All right, Nvidia, right? Everybody knows Nvidia. They're going to stand to benefit here. And everybody knows Boeing. They're going to stand to benefit here. And everybody knows Raytheon. They're going to stand to benefit here. Everybody knows Amazon and Microsoft and those hyperscalers going to stand to benefit here. Well, what about the non-headline stocks? And so when I did the AI Gold Rush, Mark, it was not just simply about understanding the leadership of King, Queen, and Country NVIDIA. It was about understanding the leadership and how that was going to pull a whole bunch of stocks that came from a more undervalued position up with NVIDIA. And that's, I think, a little bit of this same conversation. We get so caught up in the headline news that we sometimes miss out on the opportunities that are honestly coming from a better position on the chart. And so obviously, I just think it's important to understand, and that's why I'm going to write about it.
Yeah, I know, and that's if Matt didn't sell our pro community and the type of next level analysis and guidance that it provides, I don't know what could.
We talking about practice. Frankie, you're killing me. We record the podcast in Discord every week, and Frank's giving me some AI, not AI, but Allen Iverson AI, the original AI. Just get me off my spot there, Frankie.
Since we're on the Middle East, let's shift over to global markets. Let's talk some oil. One of the technical patterns had some news around it. Trump in his deal making, potentially, an Iran nuclear deal, which would free up some supply to the market. OPEC probably counterbalances, but we got a real technical, nice situation going on in oil. You just from a trading perspective, you've been talking about this in our pro community a little bit more. Just give us a highlight of what you're seeing here.
Only this week. Like this is the first week we have really kind of embraced an oil/energy conversation. And it's not because like oil is one of those end all be alls that I think you have to, focus on at all point. I think oil is really good when you have a theme behind it, right? But for oil right now, I just think that theme is just reversal situations playing out here. And I think that's the number one thing that stands out to me and other traders at Tackle Trading right now is the fact that we are seeing reversal situations play out. And it's not just reversal situations, because there are a lot of reversal situations playing out in the market right now. We, in the coaches show this week, Coach Frank and I literally detailed all the most beautiful reversals out there. It was fantastic. But it's one of the cleaner reversals out there. And because there has been pivot action here at 56 and resistance at 64, that has been really, really clean. And you've also bought enough time in the reversal with this little bit of a pullback we're seeing at the tail end of this week to really bring that 50-period moving average, which is an anchor in trending analysis, down to the breakout zone. That is a technical 1-2 punch that you really like to see in reversal analysis, when you get a clean reversal that has just enough time for all those shorter duration moving averages that you get concerned about on recovery analysis, for them to converge either at the breakout channel, so that when you break out, you're breaking out simultaneously out of both those moving averages, which can be a little bit tricky in recovery, and also simultaneously that reversal pivot at 64. And so I think what we're looking at here at Tackle is just looking at a little bit of a short-term reversal situation that is, if A gets confirmed, that oil certainly could be a little bit of a tradable asset. USO looks pretty decent right now, but energy stocks in general still have one of the more undervalued areas of the market. They did not have a great earnings season. In fact, one of the worst earnings seasons we had this quarter was energy stocks. But that context for energy stocks that having good or bad earnings season is always going to be based on the price of oil. Whatever the price of oil is doing in that quarter, that's how those energy stocks are going to perform. Well, right now, the price of oil over time is coming down, which means those energy revenues is also coming down. Well, if we see this breakout, I think you're going to start to see a little bit of love in those energy stocks, which are technically outperforming on crude oil right now. So if you're looking at a clean W on crude oil right now, you actually got a little bit of a V shape with the bear stop out analysis at 86 on energy itself. That's forming up pretty decent. Mark, and that's the thing, Mark. You say, man, all that movement came in on Monday this week. It's like, okay, yeah, we had a really good day on Monday, but we had pretty good development throughout the week. A lot of times you want that market just to go up, 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 but the market cannot sustain up, 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 up. Market, if it just goes up, 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 the only resolution out of that is right back down, 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 down. Pattern development is key. I thought
go look at Bitcoin over the last 5-6 weeks to show you what you want to see, right? Take a pause, take a break.
Take a pause, high base, breakout. Like that is the prototypical momentum bullish trending scenarios. Pop, consolidate, do it again. Pop, consolidate, do it again.
It is beautiful when it happens. Bitcoin's been very technical.
Bitcoin's a very good example of that, actually.
And Matt, I wouldn't be surprised if we see technology follow suit with similar patterns, right? Take a pause, take a break, form a high base, breakout, right?
Well, and that's what's happening here, right? You started the week knowing we were going to get momentum on Monday. Like everybody was expecting gap up, gobble up situations. We got that on Monday, and the rest of the week has really been development from Tuesday cash to the Tuesday market close till Friday here. It's really just been a development because you're overextended. It's not the fact that the macro themes are changing. It's just the fact that you don't have as much buyers at the top end of a movement as you do at the beginning of that movement. This is a technical story, and we can discuss the technical story around kind of the concepts of the market this week. But at the end of the day, I do see this as a technical story in the market right now.
Yeah, just before we get into stocks and news, just want to pop real quick to gold real quick, just because we all love gold long term. But you got a support battle thing. This is one, we're going to have a little segment coming up about what right, what wrong. You've called this one, Matt, for weeks right now. This was a great call. I want to save that analysis here for a second. But battling a support, right? It doesn't seem like if we break this support, it seems like a trip to 3,000, doesn't it?
Well, and that could be the ultimate level where we see the buyers step in. I think there's two levels to really take into account here. The first one is right where you're at right now. This is a level we've been talking about for the last couple of weeks, the 290 combo 50 period moving average test on GLD. That was the 50 period moving average on GC. And so when you're looking at gold right now, you're going through a little bit of a battle, coming through a reversal, not a bullish reversal. We've been talking about bullish reversals in the market. Well, if we're going to talk about bullish reversals in the market, typically we're going to talk a little bit about a bearish reversal in gold. And so as the market has recovered, the reasons to own gold have kind of dissipated. And so you're seeing international markets come out of gold in the short term. And I just think this is short-term mechanics, Mark. Nothing here today, nothing on the shifting volatility from last week and the week before, nothing over the last 4 weeks has changed my long-term opinion. And quite frankly, Mark, you know me very well. I'm not going to change my long-term opinion on gold. It's just not going to happen. I just think it's a matter of understanding where the level is to at. And to me, the level where you're really looking is the 290 level, combo 50 period moving average, and really the 50 period moving average, in my opinion. That level's one. The problem with that level is you haven't worked down low enough to shake off the volatility from last 2 weeks.
That's just what it's all about, right?
If the market holds here, what's it going to do? It's going to run into a lot of things.
2 weeks from now we're still trading here and we got a really narrow consolidation. That's a different conversation. But today, it's like, even for a credit naked put type seller, I'm like, I'm not selling naked.
You buy 2 weeks of consolidation, the 20 period moving average gets underneath the breakout channel, and you have an open air philosophy at that point. Right now, after 3 days of chop at the 50 period moving average, you don't have that philosophy. And so to me, I think the 290 level is a level that you could see development. But I think where you have a little bit of a stronger opinion of a demand zone historically is at the 3,000.
That 3,000 stands out both from where like an old support level. It's a nice round number. It's where the 20 weekly is. That's where I'm looking to, start to nibble and add to existing positions for sure.
And again, the thing about it is you're just fighting the dollar right now. And if you were to tell me right now blindly, which one would you rather trade, the dollar on a snapback reversal or gold on the choppy volatility? I'd blindly buy the dollar against gold right now. And
the truth,
listen, I'm no dollar whore. I love gold. I'm a gold bug. But at the end of the day, technical analysis ranks. I'm getting you a
T-shirt that says dollar whore. I'm like, seriously, I know your next birthday present. It's a T-shirt that says dollar whore.
That comes from a specific comment one time, by the way. Real quick story. Somebody was accusing me of being a gold bug one time. And I don't care to get called a gold bug. I'm not a gold bug, but I don't care if somebody wants to label me whatever they want to label me. It doesn't matter to me. I've been labeled many things in my life, but I am a gold guy. There's no doubt about that. And I said, well, if you want it, that's fine. Call me a gold bug all you want. You can be a dollar whore. I'll be a gold bug. We'll see who wins at the end of the day. And they didn't like that comment, but that's where that comment came from. So I just wanted to just give some context to the dollar whore comment.
Don't change the fact that you're getting the T-shirt, bro.
I'll wear it proudly.
You're getting the T-shirt. All right. And then crypto, we looked at the pattern real quick. Really nice setups occurring on, crypto. This thing has just been so well controlled. You might be a gold bug. I'm a Bitcoin boy. And I don't know how you don't play a breakout here of 106-ish, 105-ish if you break out here.
It's tough on the number, right? Because you got some wicks above. Typically when you got wicks above, you want to see a close above the 105 level. The 105 level is the real level, but I just want to keep coming back to Ethereum here because I know Bitcoin's developing and Bitcoin has been a really good trade at the top, but Ethereum has been outproducing it.
Ethereum
is
in my estimation, for traders. Well, traders that are never happy, as you said, right?
I disagree with that. I think I do. I don't think Ethereum was just a tradable situation the same way Bitcoin was. You were coming through a really good reversal on the daily chart that we talked about for 2 weeks on Ethereum before it broke out. And you've seen nothing but relative outperformance ever since then. And in the development of secondary patterns, you have a choppy high base on Bitcoin and you have a clean flag off the 5 EMA on Ethereum. And so I would actually say Ethereum has been cleaner in the overall analysis over the course of the last week and a half, 2 weeks than Bitcoin. And honestly, I I don't think it's difficult to say that. I think it was that way before we saw the Ethereum breakout. I still like Ethereum more than Bitcoin right now. I think I think they're both in tradable situations, and I think they're both going to kind of work out either one way or the other.
Now, I can't think of anything clever like Bitcoin Boy and Dollar Whore for Ethereum. I'll have to
No,
work on that one.
Ether.
But yeah, tough letter. It's a tough letter. All right, I want to talk a couple stocks in the news. Matt,
Yep.
I could literally, and I'm very much looking forward to reading your piece on the Trump deal thing. I think it was massive news this week. I'm glad we spent
I thought
some
it was the
time.
number one news that came
Yeah,
out this. Well, the China
I
pause obviously is the biggest one, but
but
I
as
thought that was
far as
close second.
depth and thing, and you know, and I'm very much looking, to
Ether bunnies,
Ether Bunny.
There
Someone
you
in
go,
chat. Ether,
Frankie.
that is
There you go, Frankie.
fantastic. Ether
Ether
Bunnies.
bunnies.
There you go. But getting into stocks in the news, one of the companies that got a little dilly poo out of that was AMD, who also announced a stock buyback. Now we could talk about Nvidia in depth, but we already talked about them. But AMD this week, they've quietly been making some noise. Their earnings report, right from there, they got some extra cheddar in the deal, and announced a stock buyback. So they were certainly in the news this week. What's your take on AMD right now?
Yeah, I think a really good reversal playing out here. In our coaches show reversal we did on Tuesday, AMD, Qualcomm, on semi were kind of the reversals playing out. After AMD's news on both the $6 billion buyback, which was very impressive this week out of AMD, they got two news items this week. Number one, they obviously stand to benefit from the Saudi Arabia AI deal. I don't know how much of the UAE, but they definitely stand to benefit from the Saudi Arabia deal. Number two, they announced a $6 billion stock buyback. So they got a $10 billion deal, and then they announced a $6 billion stock buyback by rewarding the investor class. And I just thought that was the right thing to do. Number one, the investor class in AMD has sat through a bunch of craziness recently, and so I thought it was the right thing to do as well, outside of just the deal parameters. From a reversal perspective, this thing kind of got a little bit dirty this week. Gapped up, got a little bit dirty. Keep an eye on the 120 level. The 120 level is an important level of support and resistance. That 120 level certainly could play a little bit in terms of development there. You got the 200-day moving average on top at 127. So either one, you're going to develop at 120 and break out at 120, or two, you're going to develop at 127. Those are the two levels right now on the top side. On the downside, there's a lot of noise underneath the price right now.
Yeah, and I mean, I could just talk, this is just such, developing fast, re-energizing of so many players, so many space, so much news. Like I said, I'm really looking forward to reading your piece on the deal set of the Middle East. One thing that you mentioned in morning action in one of the videos this week is Coinbase, right? Got put in the S&P 500, got rewarded handsomely for it.
Yeah, they did. Discover is getting bought out, so they're leaving the S&P 500. Coinbase is getting the S&P 500 love, and our question to tackle is: does it get a 35-point bump up into 300 before it gets put on? But yeah, it's good news out of Coinbase. Good news.
If Bitcoin doesn't break, this is touching 300, right? If Bitcoin itself does not break, it feels like you talk about these all the time, Matt. These magnets.
It's a magnet. Yeah, there's
this is such a we should do a whole podcast on it because it's such an important principle. Feels like you all the time, you'll just be looking at a chart, you'll be like, it has a magnet to this place, and I swear you hit those all the time.
Once it's a mid-tier breakout analysis basically, and once it breaks out of the mid-tier, if it catches momentum, there's just not a lot in open air environments to stop it. And so unless there's some type of news that comes out to stop the momentum, the momentum doesn't stop until it achieves its number. And so 300 feels like a number on Coinbase. For me, I don't touch wide-ranging candles. I need development of patterns. So this is going to have to develop. But in terms of the analysis, yeah, good for Coinbase, good for the investors, and most likely a $300 stock coming to a theater near you.
Yeah, no, it's a lot of fun out there right now in things. Now, one of the fun things is not Walmart. Walmart's had plenty of fun moments. we'll have fun moments again as it's, recovering. Those fun moments might actually be early next week when you set up a pattern right underneath 100 on a breakout. But they were in the news this week. They had earnings, right? They came out with their earnings. And for Walmart, this is the second quarter in a row that Walmart, it has not been much about the numbers, although I did enjoy the fact that their e-commerce business has turned a profit for the first time,
yeah.
which is it's just one of those massive milestones when Uber turned profit for their first time. Not that Walmart isn't insanely profitable, right? But when you get these first, right, these first that happen, they're big, huge significance deal, and so that stood out to me. But obviously, it is the commentary on the consumer. We had, in recording this podcast on a Friday this morning, University of Michigan came in, expectations were at the lowest point since 1980. You've declined in consumer sentiment. This is something we've been talking about the podcast. And it's one of those stories because there's a lot of, I saw a funny tweet you did in your on your X account about Jamie Dimon, how he's been saying the recession's a possibility, how you've outlined all of the negative things he said over the years. I got a kick out of that. Steve Cohen's out there talking 45% recession. It's a cottage industry to throw out a percentage of probability of a recession.
First of all, there's always a 15 to 20% probability.
Yeah, no matter what. You wake up in the morning in a year.
If the market goes up 45% in a year, we started that year with a 15 to 20% probability of a recession. That's number one. Number two, they're both saying 45% probability of recession. I'd like to know how it's still that high. And don't get me wrong, I'm concerned on the economy and I'm concerned on the consumer side. I'd like to know how it's that high, though, because that's exactly what it was before the alleviation of tariffs. That's where Goldman Sachs was. That's where JP Morgan was.
Numbers.
They make up these numbers. I swear to God, they make up these numbers. I'd like to hear it justified because I don't know how you can have the same probability of a recession post 90-day pause with China on tariffs and before that. Like that doesn't make sense to my analytical brain. Doesn't something have to change in that?
It doesn't. You have an analytical. I have this like qualitative whatever. It don't make sense to either one of us.
No, and I certainly do believe that the probability has slightly shifted. Right, it's not 15 to 20, but I don't think it's a coin flip.
Yeah, no, and so Walmart came and talked about the consumer. We're going to talk about the consumer.
Bet against America all you want. We'll see how that does long term.
We'll talk about the consumer, the importance, but that's going to be kind of like the story. If markets improve, if kind of the headlines ease back, you would expect to see some of the consumer data to improve. I mean, it can't get any worse, Matt. I mean, when you're literally at expectation lows that are the worst in 45 years.
Can I ask you a question? Why can't it get worse?
What's funny, Matt? We had a similar conversation in this podcast 3-4 months ago. I made some similar comment. You said that, and you were right. Right?
Yeah, because whenever you make an assumption based on economic data and say, well, it's the second lowest of all time. Well, it's the second lowest for a reason. What's the reason? Here's my take, and I just got a small take on it. I'm not sure how much we should weigh soft economic data right now. The soft economic data, and we saw this under Biden, and we're certainly seeing it under Trump, it's becoming extremely political enhanced. For example, Mark, when you're looking at the consumer inflation expectations coming in at 7.3%, Mark, 7.3% is not a legitimate expectation on inflation this year. That's just not. It's just not. Even with the tariff conversation, it's just not. And so 3.5, maybe 7.3, not going to happen. So where does this 7.3% inflationary expectation come from when the CPI report came out this week and it was 2.3%? The PPI report came out this week and that 2.3% was year over year. The month over month was what was it, 0.2? 0.2% on the month over month, 2.3% on the year over year. All right, okay. Then you got the PPI report that came in at a negative, right? Now, have we seen the tariff impact yet on inflation? No, we have not. But also in that exact same time frame, we've went from 145% tariff on China down to 30% tariff rate on China. And the effective tariff rate across the board has went from around 30% over the course of the last 3 weeks down to 14%, Mark. And so we're seeing massive alleviation here on the trade war side of the equation. And yet inflationary expectations in that exact same time frame where we're seeing alleviation, we're seeing inflation expectations go up on the consumer side. And so I'm sitting there looking at the data here today, and I'm like, I get it, the consumers are cranky, but should they be more cranky today than they were, say, in 22 when we were dealing with 9% inflation? Not expectations, but like legitimately the CPI report was at 9.8%. And so like I'm looking at the data and I'm saying, okay, it's something's off here. Something's not playing out a little bit. Mark, when you look at that in inflationary expectation data and you break it down from a political perspective, mind you, they only surveyed 200 people. Okay. They only surveyed 200 people. We live in a world of 350 million Americans. They surveyed 200 people. Of those 200 people, in Democrats, we're expecting 9.6% inflation. In what world could you see 9.6% inflation this year, Mark?
Unless they start
in what world?
Like even if you dropped helicopter money today, it still would not hit 9.6%.
You would have to see massive supply shocks that are bigger than COVID.
Yeah, so that's not happening. Even in outlandish
so we
scenarios.
Can both agree that is outlandishly ridiculous.
Yes, we can agree Santa Claus doesn't exist.
So how much should I take into account that expectation in building my own expectations on inflation, my own philosophy on what the central bank should do? Okay. So because if I take that into account, I would believe the central bank should never do a thing. Like raise interest rates right now. Just rip the Band-Aid off, raise inflation. Okay. Republicans expect 1.2%. Now that comes from last month. They were expecting no inflation.
Yeah, that's actually an uptick. They were like, it's all good.
Republicans get a little concerned. We're going to get 1.2% inflation. And even independents are quite outlandishly right now at 7.3. So maybe we just say take the happy medium here, and that's where the expectations are. Or maybe how do you even parse anything out of this university consumer report right now?
I think most people have written off the inflation expectations a few months ago. It's just as the actual consumer sentiment data. Okay, you can say you're cranky, but are you still spending money? The answer is yes. Down. We came down from last month, but consumers are still. We haven't seen retail sales break or anything like that, right? And so, consumer sentiment are working their way into
my point is, I think the consumers are applying certain things on economic surveys, but what they're really applying is their political philosophy. I think when they're getting the survey data, they're applying not their economic philosophy, not their living philosophy. I think they're applying their political philosophy in survey data right now. I saw it under when Biden was doing it. I saw it. Democrat expectations were down, Republicans were up. Now we're seeing just an absolute radical example of that right now with as Trump is president here. And I just, again, in my open question, I'm not trying to paint the consumer as happy. The consumer's not happy right now.
They're not happy.
I've been talking about the consumer being unhappy ever since Walmart's report from 3 months ago. All I'm suggesting is maybe, just maybe, we shouldn't take into account the University of Michigan Consumer Sentiment Report, which is basically a political report as of right now. I don't think the Fed is looking at consumer expectations on inflation and having anything to do with monetary policy.
Yeah, no, and it's just going to be interesting to see if they bleeding, because I talk about in the newsletter today, the consumer data. That I think my final paragraph starts out with, probably not good to bet against the consumer. That's been a losing bet, but it's worth monitoring, right? But it's worth monitoring moving forward. UNH, next stock
if
story.
The economy starts pumping a year and a half from now, and I'm not talking the market up, I'm talking the economy. I'm talking the actual pumping, economy, right? The economy's pumping, and let's say it's hypothetically the greatest economy objectively the greatest economy in the last 50 years. Let's just say that.
Now, I know you've been writing
I'm
about...
still willing to bet that the consumer sentiment report would still be in historically low ranges.
That's going to be an interesting thesis. And I know you've been writing about Trump and his Middle East during trip because you're starting to be the greatest economy in the last 50
No. That's not it. That is not it. Don't put words in my mouth and and make me have to fight that back. That is not what I'm suggesting. All I'm suggesting is we cannot rely on consumer survey data any longer since it's politically influenced.
All right, let's go talk about UNH. Just a remarkable story. When you track UNH going back for a while now, from the CEO that was, assassinated on the public streets to, the drama that has gone over the last month, UNH has been in the headlines far more than it would like. News this week about a criminal probe into the company. And that's following, that happened one day after the CEO resigned for personal reasons, and they pulled guidance. So the company pulls guidance, the CEO resigns, and then it says there's a criminal probe into the company. Man,
what a shit show!
Wow, I mean,
listen,
that's about as bad as it gets.
You hear these stories in stocks. You don't hear it in these types of names very often. Couple catastrophic
UNH is a Dow component, for crying out loud.
Give it time. No, they won't be.
This is wow.
I heard a lot of people over the last couple of days be like, should we buy a call option in front of the weekend just in case this news just isn't all that news? And I'm like, yeah, I get it. Like, you could get a significant pop, but there's some smoke here, there's some fire here, and this is a complete stay away from me.
Yeah, just a fascinating story, outside of investing, trading, thing. Fifth story I want to talk about briefly is Nvidia. Even though, we've talked about Nvidia, what I want to talk about Nvidia, because we talked about the deal, all of that good stuff. They have earnings not this coming week, but the week after. And it just crossed my mind, and I wanted to get your feedback. I'm like, it's been a while since we had one of those guidance type awesome earnings reports, right? Numbers have been solid, right? Numbers have been solid, nothing to complain about, but it's been a while since we had the guide, right? The guidance that was like, oh my God.
First of all, NVIDIA has never guided bad.
Yeah, but
there's been times where
what I'm talking about, though.
Lofty expectations were not as met. Yes.
But you know what I'm talking about with all these deals, Matt. With all these deals,
expectations are always sky high through the roof.
With China not being an issue, with all these deals, do we get a guide and press number coming up on Nvidia? It's crossed my mind the last couple of days.
It's one thing to pledge money. It's another thing to actually put that money down on, to work. I'm not sure you'll see these deals showing up in their guidance. It might take a little bit more time than that. Some of these infrastructure buildouts are years and years in the making here. And so I'm not sure it will show up in their guidance. I fully expect a hat trick out of NVIDIA. I always do expect a hat trick out of NVIDIA. But I haven't really given it much thought, honestly. You did spark my thought on that.
Yeah, it crossed my mind.
I don't have a strong opinion.
It started yesterday morning, and I was just like, I'm going to ask Matt spontaneously in the podcast.
I wouldn't assume that these deals could be legitimately impacting guidance as of yet. But if they're starting to take orders on some of that 50,000 NVIDIA H1s and A1s, then it will. So that's an open question. I think that's actually going to be fairly important. I hadn't really thought about it as of yet. But then again, I'm day to day here. Like NVIDIA is 2 weeks from now, but it is an important story coming up. I'll have to give that one some thought, Chucky.
Yeah, I know. Listen, just want to talk. Do next segment.
I would hesitate on that. Just my initial thought would be I doubt we see a massive guidance increase based solely on the deals coming out of the Middle East, but alleviation on China, deregulation environment on China, removing the old Biden rule, and
I got your brain working, don't I?
Convenient one. It'll be interesting to see how Jensen sees the combination of all of that.
Yeah, it's something just like, because I wouldn't want a naked call in front of Nvidia's earnings.
I would not short strangle Nvidia's earnings. No,
Not this time. Not,
no,
not
no,
this
no,
time.
no,
Not this. Next segment, I just want to talk about real quick what we got right. I just want to give a shout out, pat ourselves on the proverbial back. I thought there were two things in particular
This
recently,
is
Matt.
interesting.
You did really right. It's a new segment. It's a new. Now
I was not prepared for this.
there will be the what we got wrong too, right? Like nobody's 100%, right? What we got right, what we got wrong is the name of the new segment. What we got right, what we got not wrong. Two things. One, I thought your gold analysis over the last 3 weeks has been spectacular. But here's an instrument you love. It is your favorite long-term instrument. It is your favorite. And you objectively were able to walk through the shifting volatility for our members. I know for covered calls and so forth. You've been really good on this one, like eerily, like really good. Just anything to add to my praising of you?
Well, I don't like praising. That's number
I know
one.
it makes you uncomfortable. That's why I want to do it.
Number two, I didn't think it was that hard of a call.
Okay, shut up. You're so stupid sometimes. I'm going to go from praising to insulting. It's not that hard of a call in a asset class that was the most owned in a parabolic uptrend to call a top. Yes, that is a difficult skill set, even if it's not difficult in your head.
I'm gonna say technicians could have called that too. I did
No,
call it
not
before
even.
I did call it before the double top. I did call it.
You
before the
did.
double
You
top.
called it before the double top.
Yeah, it was more about the dollar than it was gold.
Wasn't that hard a call?
It wasn't that hard of a call.
Oh my goodness. See, only brothers can go from praise to insult in like 4 seconds. All that. Also, your general reversal analysis. I thought you've done a great job guiding our pro community through the reversal aspects, walking them through in the newsletter, the different stages, saying, hey, if we see this, I don't care how bearish you are, this is bullish. We saw that. You walked us through the stages. Just well done on that.
If there's, I will accept that one, Chucky.
Well,
I will accept
the other
that
one too,
because it's not just me. I think tackle trading and the coaches of tackle trading are excellent in correction analysis. I think the coaches of tackle trading have some of the best analysis when it comes to dealing with corrections in general. In the world, we see panic and chaos and people try clickbait nonsense. Every coach at tackle trading has clear eyes, clear head. They understand the historical case studies. They understand the historical advantage. They understand the stories that need to be understood, and they walk our community through it very, very well. And so I'll just say that's a general tackle trading skill set. We all preach reversal analysis both on the top side and the downside, and I don't think there's a better community led by better coaches to navigate these types of environments. Don't get me wrong, you'll have people come out there in these environments be like, buy the dip, buy the bit, buy the dip, buy the dip. They say it every day during buy the dip. They say it every single day, and then all of a sudden they get proved right, and it's like, oh, look at that, and then they get a million miles and a million clicks on being right 1 out of 20 times. I think understanding correction language, correction patterns, correction stories, reversals, and being able to navigate that day in and day out to the point where you know exactly, all right, this is where our edge, this is what we need to see happen. When we see this happen, this is good. This is what's going to occur next. And just being able to be there with the community every single day and being able to navigate that with them every single day in a community like tackle trading is yeah, it's a skill, Mark, but it's a blessing, and I see it as a blessing. But I'll give the coaches all the credit on that one. I'm just part of that.
We're a collective thing, it's well said. I give myself a pack on Boeing, but we're running out of time to get this podcast done. I was talking about Boeing and deals before the deals were actually done. I was over that one before it happened. New secondary that was stretched, right? That was because it was just chatter before the deals on, well, like if people are going to make concessions, who are some of the winners? Well, people buy Boeing. Is it just an easy call will remain? You'll see that continue when we strike a deal with India. Guess what? You're going to see Boeing included from Indian Airlines. buying additional
They're
Boeing
being
coins.
included on every
They're
deal he's out
included
there
on
right now.
everything.
Yeah.
Like, like Nvidia, Boeing, there's some things the administration's like, we have your back, right?
Well,
And
those are
that's
two big brands, international brands that countries want to deal with, quite frankly. I mean, when you're talking about
they have products.
buying products from the United States, you're not talking about shoes. You're
Yeah.
talking about jets
Foot
and
Locker
military
got
and
bought out this week.
defense and semiconductors and hyperscalers. That's what we produce to the world. And so you're talking about big time deals out of big time companies, and it's important to understand. And I thought you did a good job. I'm not the biggest fan of Boeing, and yes, I still believe that Boeing needs to be held to account for the two airplane crashes from 2017 and 2018. I say that today, as today they are doing a deal with the DOJ where they don't need to be held to account. So, well, yeah,
the administration has their back in
I'll
more than
pat
one
yourself
way.
on the back for your Boeing call out. You were right. I still
Yeah.
think this company needs to be held to account.
Yeah. No disagreement with that. Quick look ahead, and then we're gonna have a few quick questions from listeners. Next week, look ahead. Pretty light week. Earnings front, you got Home Depot and Palo Alto on Tuesday, Snowflake on Wednesday. Really light week. Economic calendar, almost nothing is occurring. You have services and PMI. Matt, we have a catalyst light week on the earnings front. On the economic calendar, feels like I wouldn't be surprised if the markets just kind of drift up a little bit, kind of like they've been doing. Trump is supposed to announce the next trade deal when he gets back. My bet would be India, but you never know. What thoughts of the week ahead? It seems like kind of boring.
I thought that India deal was going to be announced for the last week or so, and it hasn't been. It seems like something's getting caught up a little bit.
Or that they just want Trump to get back so that they
maybe Trump was yelling at Apple about doing supply chain in India, so that might have something to do with it. But Japan might be there, South Korea might be there. There's a lot of trade deals to be had here, but I would say Japan or India as well. Lighter week next week, both on the economic and the earnings side of the equation. On earnings, when you look at the S&P 500, you only have 15 components reporting next week, led by Home Depot. Outside of that, on the economic side of the equation next week, there's just really nothing. It's one of those weeks where you don't expect a tremendous amount of volatility, which means you expect it to be a technical conversation for the most part.
Let's finish up with Coach's Corner. A couple questions from listeners. First question: what is your favorite bullish pattern in the current market? What should I be looking for? And I think what this listener's asking, right? You hear about pullbacks and high bases, and mid-tier breakouts, and what's your favorite one, Matt, right now? Like, what's the one if you saw you'd be like, yeah, that's my go-to bread and butter right now?
A reversal at the low point or a intraday high base.
So expand on that, like reversal at the low point, like
crude oil is reversing at the low point.
Okay.
We have a list of about
coming
15 potential reversals.
So like
on
energy,
the reversal watch
type of stuff, though.
Yes.
Not the sector specifically, but
more
the
on positions style analysis.
Like you brought up
reversals of the low. Yes.
Yeah, you brought up
those types of reversals. Or two, a intraday high base where you have to basically break it down through short-term consolidation to trade the momentum. Those are the two.
In fact, I think I'm going to make that just a segment. What's your favorite pattern this week? Because I find that very practical right now, right? An expert trader.
I think there's mid-tier. There's mid-tier opportunities.
I think I'm going to ask you that question every week.
There's mid-tier opportunities, but I think there's a couple reversals that and Coach Frank is maintaining the watch list, but there's a couple reversals that are playing out that I'm interested in. There's a couple mid-tier, and momentum chasing is like combo day trade, swing trading. But here's the kicker, Mark. We're going to put those on our traders report every single week. And so right after this podcast, you and I are going to jump into the scouting report meeting. We're going to curate and dial in our rankings for the newsletter. We're going to curate and coordinate on our pick list. And if you want the best technical setups every single week in the market where you don't have to worry about earnings, you don't have to worry about any other thing because we take that into account, that's the traders report for the pro membership. That's the traders report right there. You want your favorite picks. Get the traders report. It comes out for the pro members later on today.
Yeah, listen, next question. And you can tell that this one has been listening to you on the podcast a little bit. The hourly chart was your favorite chart for the stretch in reversing. I think referring to like when we were, in volatility and you were, focusing on that. I think that's what they're referring to. Are we squarely in daily chart analysis at this point?
That is such a good question.
I thought it was. Well, there's a reason I picked it out of the
that
question.
Is such a good question because the hourly trend was the dominant trend during not only Liberation Day to the bear stop out pattern, but even before Liberation Day, it was the dominant pattern. It was the dominant trend from this candle right here on I know it's been a while now, but that's been since February 21, Mark. Since February 21, when that candle broke all that cluster of moving averages and we just caught that 9 all the way down, that was a 1 hour trend. You could also look at it on the 4 hour trend there too. After Liberation Day right here, and that trend, the 1 hour trend was dominant, but the daily, you could still do a lot of the analysis on the daily chart. From Liberation Day here on, daily chart analysis really wasn't that big a part of everything. It was understanding the major zones on the daily chart, but it was really about understanding that
it was check
chart.
The zones, go to the intraday chart.
Yeah,
check the zones,
and that was from April 1st, Liberation Day announcement till really kind of bear stop out. And bear stop out was really kind of back here at the late April. And then once you punched up against the 50 period moving average, at that point, the daily chart became a little bit more important because we were able to start tracking the flag on the daily chart and then the base going back up. So the daily chart is certainly a much bigger part of the conversation right now. For example, when I go to the NASDAQ here, my general philosophy on the NASDAQ here is slight overextension. And you can just say that based on the daily chart. You can say, yeah, we're slowing momentum down. Yeah, well, that's just based on the daily chart. And so the daily chart is certainly becoming a much more attractive chart to kind of anchor to. And so is it the dominant as of yet? If it's not, it's getting close. If it's not, it's getting close. I still believe the 1 hour trend, the 4 hour trends, those are still important to understand, gives you the context of the daily trend, but daily charts are certainly becoming more of the focus right now. Well, that's normal. After you remove volatility from the equation, you start extending time horizons, and that's exactly how this has played out.
Final question, advice for a new day trader. Looking forward to working in day trading. I'm retired now and I can spend some more time. Did a mentorship with Keith King back in the day and was intrigued with day trading.
He's the GOAT.
And any advice on where to get started?
Well, if you mentored with Keith King, I'm willing to bet you're going to get started with micros on the ES or micros on the NQ or micros on the GC, and I know that well because that's Keith King was one of my mentors, and he taught me quite a bit about day trading. Where to start? That's a loaded question. There's a lot of where to start when it comes to day trading, but I would start with those micro contracts, and I would start practicing the intraday trading on micro contracts, and I would come over to Charts and Chill every single day at Tackle Trading. Our new Discord hangout we do every single day with the pro members. If you're a pro member of Tackle Trading, you get access to our Discord server, and in our Discord server, we do Charts and Chill every day at noon Eastern Standard Time. And if you have a question on a day trade, pop it in. We'll break it down together. And so I would say start by coming to Charts and Chill and bring up an asset class and let's break it down together.
Now listen, sign up for morning action. Matt does a fantastic job. Literally, you come to our morning action page, you sign up for that email, you will know everything important going on in the market in just a few minutes. You'll get a fantastic world-class trade setup every day. Sign it up. Go into the link, sign up today. Sign up right now. Matt, send us out.
Yeah, everybody have a wonderful, wonderful weekend. And if you need anything from us at Team at Tackle, hit us up at team@tackletrain.com. You can hit us up in our Discord server as well. Make sure to hit like and share on the podcast and whatever platform you are watching. And I just want to say Thank you to all of our tackle trading community, our greater tackle trading community, for being the best part of tackle trading. And so I appreciate the listeners, the watchers, appreciate our pro members, appreciate our community more than you will ever know. And if you need anything from us, we are always there for you. And if you're ready to become a pro member, it is very easy. There is another link in the description below that you can sign up for a 15-day free trial of the pro membership and test out all those goodies we talk about every single day at tackletrading.com. Have a wonderful weekend.
Have a great week, everyone.